When companies find themselves subject to False Claims Act matters brought in through a Qui Tam complaint, and a whistleblower has brought claims against that business, these can be time-consuming and expensive matters both to defend with potentially high indemnity costs. There are strategies that businesses can use to obtain insurance to cover these defense and indemnity costs. The first strategy is to proceed with the understanding that FCA claims are covered. An insurer's duty to defend is broader than an insurer's duty to indemnify. What this means is that even if it is not certain that an insurer is obligated to defend an FCA claim, it still has a duty to defend the claim. A misconception that policyholders have is that there is no coverage for FCA claims because often the claims include allegations of fraud. There may be coverage for allegations of fraud, and even if there are not, there at least is coverage for the defense of those claims. A second strategy for obtaining insurance coverage is to evaluate as early as possible in the process whether to tender notice of those claims under the insurance policies. Often, the claims are filed under seal long before the policyholder ever receives or is served with a copy of the complaint. So what this means is that often a policyholder's first indication that there are allegations brought under the FCA is the inquiries or communications from the government. And as soon as one of these communications occurs, policyholders should be considering carefully whether there may be a need to tender coverage of these claims. This is particularly important because the risk of forfeiting coverage is so high if a policyholder does not tender notice of those claims as early as possible. A third strategy for obtaining insurance coverage for whistleblower or Qui Tam cases brought under the FCA is to tender notice both to primary and excess carriers. We see instances, and in fact there was recently a big case involving a Tennessee hospital healthcare system where the policyholder tendered notice to its primary insurer of an investigation, and then many months later, after millions of dollars in defense costs have been incurred, the policyholder then tendered notice to its excess carrier. This was a clear example of where the court adopted the insurer's position that there was no coverage, and they found that the policyholder had waived its insurance coverage. So the lesson there is even when the policyholder does not know whether this could be a $500,000 case or a $40 million case, tender notice to all the carriers, both primary and excess.